Hey guys, just wanted to go through a couple things. Just basically this is just an update to the last video I posted. So basically we've been moving smoothly through the situation. I was looking for market to kind of start to move in October, finally seeing that, finally starting to make some sense of what I was saying. I think it's very hard to kind of sit there and understand. Number one, midterm election years are very volatile. Be ready for that. Number two, summers are always going to be very tough to trade. Either you have wide stops, sit out, or there's a bunch of other ways to do it. For me, should have been wider on some of my stops on some of my positions into late summer. Q1 was phenomenal. Put a nice buffer for the rest of the year. But into summer, I think I could have done a couple things a little bit differently. And then kind of getting into fall now, kind of into that zone where I think we should continue to see this move up nicely. So, it's one of those years, and I think everybody, like most funds, retirement portfolios, most people are down. There's very few people who are having an up year. We were having an up year. And most of the trend followers are having an up year. The reason why is these are extreme moves. And at the beginning of the year, the commodities were moving. And also, these are very different moves than you usually see. Whereas some years you'll see, most of the time, if you're seeing commodities moving up, most of the time the dollar is moving down. It was the opposite at the beginning of this year. Bonds are short while the market's going down. That hasn't happened in many, many years. So all of this kind of happening all at once was kind of a perfect storm for a lot of people to have a lot of trouble. But it's still whatever it is, even for trend followers, it's been a very volatile year, some chop to really live in. It hasn't been simple for anybody. So, but getting into the end of the year, what I talked about in the last video was I was starting to get a little bit more bullish, seeing many reasons why. I went through all the October bottoms and the bicentennial cycle and some other cycles and some seasonality kind of getting into the end of the year. Once again, it's not something I go, look at this great seasonality, I'm just going to buy. I'm going to look for actual reasons besides that, but this is going to kind of build my roadmap. So the cycle kind of told me, hey, we could see a bottom here. Are you seeing any reasons to start to buy certain things? Okay, there's relative strength in blank. Builders were one of those areas. Materials, materials, and then energy still is awesome. Nobody wants to buy it because they look at a year-long chart and they're like, oh my God, look how high energy is. But in reality, it's still really low in comparison to where some of the stocks should be by this point in time. So that's another thing to continue to keep an eye on. It never got stopped out. The energy sector continued to hold on and just chop around for all summer. And now it's moving back to the upside. Very strong trend there. And the commodities that were getting kicked in the head, they're looking a lot better now. So we'll see where that ends up. But basically, I wanted to go through some things on I don't know why that's why there's basically seasonality moving, and this is from the Stock Traders Almanac. This basically shows midterm election year. What's an average change in November? Now, remember, November is one of the most bullish months in the stock market in history. And then we have the midterm election year, which is even more bullish. 2.5% in the Dow, 2.6 in the S&P 500, 3.5 in the Nasdaq. These are averages. Best year in the Dow, 11.8%. Worst year, 1973, down 14%. Once again, seasonality isn't 100%, but the big thing is we're trying to get the probabilities on our side. When you have so many, like basically 49 moves up compared to 22 moves down, that's a lot of probabilities on your side that says we can move to the upside. I like to look at the Dow when I'm looking at these things, or the S&P. There's a little bit more history there. And then moving right through, now we're looking at record up to down in the last year. That's from 1980 to 2021. Average down, average percent change, and the bad years, average percent change in the good years. So these are very good to kind of understand a good roadmap of what you possibly could see in the market. Doesn't mean you just buy it blindly. It means that, hey, we kind of see this kind of cycle kind of happen over and over again. Keep an eye out for it if you are looking at something. And what you also find out too is, seasonally speaking, you can also find that there is good seasonality in the end of the year for industrials, materials, and some of those sectors, which they start to outperform the Dow by a lot. So keep an eye on that as well. And then also there's trading days, options expiration days, option expiration weeks, last trading day performance, first trading day performance. So good things to keep an eye on. So LPL research had this, an impressive 2.8% has been the average gain during the 8 trading days surrounding the midterm elections since 1934. This is the equivalent of roughly 966 Dow points per day at present levels. There was only one losing period. That's all midterm election years. One losing period in 1994, when the Republicans took control of both the House and the Senate for the first time in 40 years. Now, why I'm going through this isn't to say, we talked, or to say, hey, look how right I was. Like, it's not about that. My point in posting this is a show. When you look at this, one day you're going to be trading down the road, right? You'll be 10, 12 years down the road in trading, and you'll look back and you start to kind of be able to see these things happening a little bit more. And these things will kind of pop in your head, like, oh, midterm election. What happened in the last midterm election I was a part of? What happened in the presidential election in 2020? My experience in 2016 helped me in 2020. If you haven't looked at both of those, definitely look at 2016 and 2020 elections and just kind of understand what happened to the market in those times. You see a big overnight move down in the S&P when Trump took office in 2016. Fear of the Trump blowing up the world, blah blah, bad, whatever. All of a sudden the market explodes and went up straight through a year, basically for a year and a half. And then Biden takes office 2020. It's a Democrat. It's the opposite scenario. Everybody thinks it's the end of the world again. Once again, Republican was the end of the world. Democrats the end of the world. What happens? Market moves up again. So looking at that, we can kind of look at, oh, well, this is the VIX performance during U.S. presidential elections. Okay, so this means that, and guys know the VIX is usually inverse to the market, not always, but usually inverse to the market. We see that the VIX peaks around the day before the election. So boom, get this big peak day before the election, and then it kind of drops off of a cliff through the next 20, 30 days afterwards. Sometimes it starts to move up after that point, but this is a good, you're looking at 10, 20 trading days. That's pretty good. And then the S&P, same kind of thing. We see these kind of either bottoms slightly before, bottoms slightly after, and then boom, great move up in the S&P into the end of the year. And the S&P performance during U.S. presidential elections, that basically, you can read through that if you want to, but basically showing that, yes, this is from the same thing, showing that, yeah, it does have some good moves during at that time. The presidential parties usually lose seats. Now, this does happen, and that's the normal thing, and everybody was panicking about it. So people start to go, oh, well, if this happens, then the whole everything will blow up, and that'll be the end of the world. Or if this happens, this will blow up, be the end of the world. Mainly, that's just what happens. The market still tends to move up right afterwards. It's not really about the election or what exactly happens in the election. It's more about the election is over. People are very short term in their mind. So the second the election's over, everybody's either happy, mad, their opinions and their feelings all go through them very quickly, and then end up on the other side of it, and they could care less because people are very short term in their thinking. So boom, people move on, and people get back to business. And usually people are a little bit happier because they're not so stuck on what's going on in the election, and that leads to a little bit more upside in the market. Stocks have done well regardless of the makeup in Washington. This is unified government, unified Congress, split Congress, all 3 different ones. Market still moves up. And basically, this was from the last one. Basically, we're looking at bottoms in the market. These happened in October. I went over this in the last video a little bit. And then also, this is midterm election year in the blue line. As we see, we really followed the seasonal pattern this year pretty well. coming off the beginning of the month, getting that big turnaround. I went over the chart and that fake out bottom that we saw. And we don't know, once again, if this is a bull market from here. All I really think is that we see a nice rally to year end. I could be wrong on that. Nobody knows anything 100%. But I think we could see a rally into year end at the least. And so if we look at these things, kind of going year to date, energy still leading the way. Let me get the VIX off of there. Energy is still leading the way by a lot. Mexico's on there. That's another one we like. That's still moving up. Really like the Mexican peso. That's a good trade. Relates to Swiss franc. Some of these currencies are starting to look really well, and they look like they're ready to move. I still really don't want to be a buyer of the euro or the pound or any of these, but I still really do like those few currencies. XLE, strong. EWW, that looks okay, but mainly most of these sectors are still underwater, and by quite a bit, and especially the tech heavy sectors. Looking at the past 3 months, we see a little bit differently. We're starting to see, okay, well, some of these are starting to move up. These bottoms that we saw around October, end of September, in a lot of these markets, as you see, energy bottomed in September. Some of the others, they bottomed in mid-October. Now we're starting to move up in these areas, and some of them that were underwater are starting to get out of it in the last 3 months. XLF being financials, XLV, that's healthcare, and then XLB, which is our favorite sector in the year end, being materials. And I think that could be a good trade into year end very easily. If we look at the factors, basically style factors are still kind of saying similar to this in the last couple of years, which is value is still leading the way. Value stocks are still leading the way. I think they will continue to be kind of a place to be for the next year or so. I don't know anywhere further than that, but I still could see that being the move, as long as yields kind of hold in the same direction as they're going. General trend, not talking about in the medium term, things will move back and forth, but in the general trend of things, if they kind of if the long end kind of holds it the way it is and the short end starts to even move down a bit, I could see large cap values, mid cap values, small cap values still leading the way. Dividend stocks as well are very strong in here. So there's always a time to buy certain sectors and certain style factors, and right now is kind of a time for that one. Looking at global yields. Same thing. As we look at this, we're still kind of seeing that, the curve is inverted. It's not looking not very pretty just yet, but it's starting to kind of pull back and trying to generally get into a better direction. The 30 years trying to move up a bit, while the rest of them are kind of moving down a bit. I could see this being a very interesting time to look at the 2-year yield. Do I want to be a buyer of 2-year bonds here? Bonds are inverse, so if you're buying 2-year bonds, that means you're short the 2-year yield. I don't know just yet, but I would be very interested in seeing a long trade at some point coming up soon in the 2-year bond. I think inflation is here for a little while. I think we will see pauses in it, and I'm not talking about commodity prices. I'm talking about what they think is as inflation, which are the lagging indicators the Fed uses and what all normal people use. And so as we see those lagging indicators kind of move through, I could see that if inflation's here to stay, but the Fed starts to repeal policy, pull back on policy just a little bit, I could see the 2-year yield coming down and the 30-year moving up, and kind of creating a nice spread trade at the moment. So we'll see where that ends up as well. And then let's look at currencies. Currencies, as you see to the dollar, nobody's winning year to date. There is nobody winning year to date. If we go quarter to date, well, actually we'll go 3 months out. 3 months out, see the euro actually has kind of started to bottom around that point. The Swiss franc has also started to bottom at that point. Quarter to date looks a bit different. Now, the pound, as you know, the ERM and Great Britain as well. Some of these are coming in to start to support their currencies. Australia's starting to some of these are pulling back on their monetary policies, which their currencies are getting blasted, their countries are getting blasted. For all the inflation people are seeing in the United States, it's nothing compared to what people are seeing in other places. So if we're looking at this here, we're still seeing the NOK is actually the leader. That's interesting. And then we're looking at the New Zealand dollars is the leader. So that's very good to see. So I could see this kind of trend continuing where these currencies continue to get stronger and stronger and stronger against the dollar, mainly into year end. I don't know about the next 5 years. That's not what anybody needs to be doing as if they're a trader. I need to know what's going to happen in the quarter to quarter and year to year. And I think at least till the end of the quarter, we'll see a pullback in the dollar. And I think some of these stronger currencies are where you're going to want to be. And then let's go through some of the sectors. So basically what we're looking at here is the weekly chart. So I want to kind of look at, okay, are these starting to bottom? Are these starting to reverse? So I like these type of patterns. I like the 200-week MA. It seems like a lot of buying has always happened around those areas, especially if it's upward sloping. If it's downward sloping, that's another thing, or flat. When it's upward sloping, we're catching on there. We bounced off at once. We created a higher low. And this is the home builder sector. Next chart is XLB. This is materials. Looks like the lines are a little crappy, but that's all right. It's old. I haven't updated this. I go through this for people in the group, and I haven't gone through this chart list in a while, so there might be some lines on here, so bear with me. This also looks good. Moving back into bullish trend. This is the sector I really like coming into year end is materials. XLE. Energy looks great. It created this triangle pattern here. Great. Like I love these type of patterns because this is where everybody panics. Head and shoulders, watch out, or it's going to go straight down to zero. And then when it rips to the upside, these gaps out of it are very profitable. High probability trade there. Continued higher. Another consolidation. Now we're moving higher again. Still long the energy sector. Still really like the energy sector. Financial sector. So this is XLF. Once again, came back, hit the 200-week MA, upward sloping, reversed up. Also like financials as well coming into year end. Industrials. I really like industrials as well. Same thing. Hit the 200-week, not a higher low, but it came back to hit the 200-week and continue to move forward. XLK, tech sector, does not look nearly as good. I know people want to buy it because everything looks cheap. Yes, it's bouncing off the 200-week. You could buy it. You could attempt it. Not my style of a trade right now, so I'm going to still stay away, but it's still looking more constructive. And we really do need tech to participate if we want to see the S&P go higher. XLP, consumer staples, still not something I want in this sector, but if you like it, it does look good. It has held up much better than other sectors. It is trying to rise higher and is above all the major moving averages. XLU also came back to it actually surprised me that it dropped that quickly, that fast, all the way to the 200 and bounced. Be another interesting one depending on the environment. You want an environment where bonds are actually moving higher, meaning yield, the 30-year yield moving lower, to buy, and also in a bullish environment to buy and get long utilities. Utilities, yes, it looks good, but if you compare it, yes, it's been in an uptrend for a long time, but it was underperforming the market until the market started going down. And now it's underperforming again. Not a sector I want to be in once again, but take a look at it if you're into utilities. Healthcare also looks great. That is a sector that is worth being long. Looks phenomenal, very close to a new high. How far are we away? 5% from a new high. It's really good. XME, we had a flag, broke out, came right back, gave it all back. Now kind of consolidating, moving higher. I am still long XME. I do like XME a lot. That could be a good sector to find some stocks in. Okay, where's the So copper is interesting here. Copper is one that I do like. Did they get long as it moved out of this zone? So we will see what happens with copper, but I do think copper is going to be an interesting one into year end as well. Um, this is a very like all the commodities basically are there are none. The supply is dwindling. Exchange supply is very small. The futures exchanges. So we'll see where that one's ends up. Copper to gold ratio, copper is still outperforming. We had it come down a lot, gave a lot of that back into that was July, started to move higher, and now we're back up and over the moving averages. That could be a good one to look at because we're trying to see what's going on with yields, and that also can tell us some direction of yields as well. Corn's still kind of chopping around. Big moves, but that's you got to get used to that if you're going to trade commodities. This is why positions have to be smaller if you're going to be trading some of these very volatile commodities. Cotton looks like dog shit, honestly. Ethereum, this was one of the ones. Bitcoin, where's Bitcoin? It's got to be in here. There it is. So Bitcoin was a surprising one to me, as we kind of saw this come through a squeeze pattern, had a major squeeze pattern, broke out of the squeeze pattern right here, and then boom, got stopped out. Trailing stop was hit and gave it all back. Sell signal. It was a very quick hitter on that one, but you don't win every trade. There's no possible way. This is why we use stop losses and get out of the trade. Wait for the next trade. There will be a new trade. The FTX news hit everything hard. This is why you use stops, because you never know what's going to come at you from left field. And it can get you out of positions. And basically, the whole thing is how do you survive an alligator attack? I'm talking to myself like I'm going to answer. You survive an alligator attack by letting them take the limb they want. So if you fight them, if I go down and it has my leg and I go to grab it and do something, it's going to get my arm too. It's going to get my other arm. It's going to kill me. It's much stronger than me. I cannot pull its jaws apart. But if I let it take something from my body and it gets to have it, I'll survive at least. So sometimes in trading, you have to think about it that way, that you'd rather leave with a small loss than leave with a huge loss. So continue to, cut out, get rid of positions. This is why I don't think the secret in trading and doing well is me picking really great stuff. I think I do that. I think I'm good at that for probability based wise. But what it really is if I'm a loser on a position, it's only going to take a certain percent of my portfolio, 1, maybe 2%, of the portfolio. It's going to whack. You can survive a bunch of those. You can't survive if you have a position and you're like, oh, I have, let's say $100,000 portfolio. I have a $100,000 Bitcoin position, and then Bitcoin gets cut in half by 50%. Let's say you have leverage and you're using, you have a couple different positions and they get cut by 50%. What's left? There's nothing there, So you have to think about it. You have to have these small losses, and this also will stay in line with your volatility of your entire portfolio. Like if you're 1% of your portfolio is an easy one. So if you're $100,000 portfolio, each trade you lose should lose $1,000. If you're making money on trade, let's say your average winner is about $5,000. That means you can lose 5 times in a row, make one winning trade, and that will pay for all your losses. It's a really important part of trading. So J&K also still not looking great, not looking terrible. It's a good risk on, risk off signal. So we're going to continue to look at that one. It doesn't look as bad as you think, actually. It is holding up all right, but it's nothing, I'm not saying risk on at the moment from that signal at all. And then here's the J&K TLT ratio. This is still just raging higher, because the government bonds are getting hit so hard. That's not really a great sign because the government bonds are just hitting so hard, so it's kind of messing up that indicator. KRE, which is regional banks. Um, Once again, I always talk about head and shoulders patterns, and it's not because I think, oh my God, the head and shoulders is going to break down and it's the end of the world and blah, blah, blah. It's because most of the time I like to see them come to the upside, like it's doing, getting above these moving averages. And I'd love to see a gap out here, a gap out of this section, getting up and over this whole right shoulder and continuing to move higher. That would tell me a lot because the KRE is a great signal for the market. Now you see that even though the KRE has been getting hit, this is against the broad market, it's still held up a lot better. Those are higher lows. It's looking a lot better than the broad market. So I still think that's probably a good signal into year end as well. Semiconductor is also another one that you want to take a look at, mainly because look at this major move here. This is also a good risk on signal. It did break out of this falling wedge, came back and canceled it out though. Lower low, got under the 200 MA. Once again, you kind of like most of the time when I'm looking at something like a MA or a support line, I'm thinking about it more like this. Yeah, that's a lot of percentage for people if you're trading too big. If you're trading small, though, it's not that big. So you want to think about it in a very large way. Also, you don't want to buy on the way down. If it is falling, you go, okay, well, let's say you do buy here or you're looking at it here. You'd go, okay, when it gets above this zone, then I'm going to look at buying. So here it does. That's going to make you a lot safer. You're going to have a place to put a stop. You can't do that any other way. Buying straight down just means, oh, I tried here, I tried here, I tried here, I tried here, and you're just kind of guessing. And then here's TLT, which is the 20, 30-year bond. Now on the weekly, straight downtrend, looks pretty terrible. Don't want to touch it by any means. Still short. We were short those bond markets for a very long time. Still short 30-year in the portfolio, but now I am looking at this and being a little bit more constructive because of my playbook. So looking at it and going, if we actually started to gap over these zones and get out of here, I could see bonds at least rallying to year end as well. Once again, that's complete speculation. That is not a signal. That is nothing. That's based on what I think and know about the markets after trading for a little while. But thinking about it in a couple of ways is one, year-end rally, a little bit of if the Fed follows through on what it's actually saying and so on, this could all happen very easily. But if anything was to happen and inflation continues to get out of control at all, these are going to fall off the face of the earth. So it's better to just stay away from these if you can. But I do like the idea of yields kind of stalling out here for a little while, maybe into year end, and bonds maybe just, I don't even know, up might be a little bit too ambitious, but sideways would probably be make a little bit more sense. So looking at platinum, platinum was the one that I thought looked really good. We talked about, I don't know if I talked about it in the last video, but in the Zoom group, we talked about it. Basically making this kind of triangle bottom pattern, reversing, started to make higher lows, and then broke out of this whole thing and has just been raging higher ever since. Really like platinum. And this is also why I kind of think yields will either stall out or start to move the other direction for a little while. Because platinum, silver, gold, these are all starting to look good again. And I haven't said that in a long time because gold has looked like shit and platinum and silver as well. But now we're kind of seeing, okay, well, we did have all these come out, make new lows. I love when things make new lows and then reverse and strongly reverse. Now that's a very strong weekly candle from gold. We continue to move higher here and break out to the upside. Gold could rally to year end too. Gold usually is a very bullish period around December through January. So let's keep an eye on that and see how that goes. All right, everybody. Hope you guys have a good week. Hope you guys have been doing well, and we'll talk soon.